If you asked people to name some publicly listed stocks, they'd probably come up with the same sorts of names: Apple, Microsoft, Amazon, and so on. But most of the stocks listed on major global stock markets you've probably never heard of.
So there's about 11,000 stocks worldwide that are listed. The biggest single market is the US with around 4,000 stocks. And the distribution of sizes there is really, really broad. So there's a small select few that are very, very big. And then there's a very, very long tail. There's much more companies that are a half, a quarter, a hundredth as large, all the way down to companies that are perhaps 1 million or a couple of million in valuations. They're also listed on the exchange.
There's evidence to show that it makes sense to have some exposure to small and mid-cap stocks as well as to so-called mega stocks. Simply put, smaller stocks have more potential for growth.
You can get a lot of the equity, what they call the equity risk premium, i.e. a return from investing in the stock markets. You can get a lot of that by just focusing on large companies. And in fact, because there are some that are so large, they actually capture a lot of the overall market. However, if you're interested in companies that have better growth prospects, then you might need to look beyond the largest. So Apple's currently the largest member of the S&P 500. And I pick it because over the last 20 years, it has been an astonishing success story. Its return is over 100 times that of the benchmark in that period. The S&P 500 went up just over 3 times, Apple just over 30,000 times. Now, well done, Apple. Is it possible that that could happen again in the future? It's almost impossible that it'll happen to what's already the largest company. But among one of those smaller companies, that may very well be one of those success stories.
Despite the case for diversifying across stocks of different sizes, most investors tend to focus on large caps, particularly investors outside the United States.
If you look at European fund investors, they have almost no exposures to stocks in the mid and small cap space. Vast majorities in this S&P 500 space. Now, part of that could be because of a lack of expertise, a lack of opportunity. There's a lot more. It's a lot easier to invest in a large cap fund. But that is changing, and I think ETFs have played a big role in that. And nowadays you have potentially quite liquid, quite easy, quite low cost ways to invest in mid and small caps, not just in the US, but across the world. So I expect it to change, but certainly as we look at it right now, many investors, when they invest internationally, will focus on the large cap space, and that may not be taking advantage of the full opportunity set they have.
In short, large cap index funds are a sensible investment over the long term, but you may well do better by investing in smaller stocks as well.